You may have noticed that suddenly, everyone has an opinion on lithium. For 2 years, nobody wanted to touch it. It was a dead trade. But in the last 3 months, the price has woken up. It's moving vertically. And when you look at the chart like this, the natural human reaction is anxiety. You feel like you missed the flight. You feel like the easy money has already been made. I'm here to tell you, you haven't missed anything. In fact, you're likely looking at the first inning of the decade-long supercycle. The retail market thinks this price surge is just a bounce. They think it's happening because China is buying a few more electric cars this quarter. They're thinking too small. The smart money, players like Tesla and ExxonMobil, aren't buying lithium assets because of quarterly car sales. They are buying because they have seen the physics of the next decade. They know that the energy density required to power a robot economy, to run humanoid laborers, autonomous weapons, and physical AI cannot be met by fossil fuels. And it cannot be met by the battery currently in your pocket. While retail sees the trade, industry sees a survival requirement. In 20th century, if you ran out of coal, you burned oil. If you ran out of oil, you burned gas. You had options. But in the 21st century, there is no option B. The era of burning liquid dinosaurs is over. The solid-state era has begun. Welcome to Growth. I'm Sean, your guide to money and navigating the frontier of innovation. Today, we are going to look at the death of gasoline, not as a political slogan, but as a physics problem. We are going to break down the Lithium Paradox, why making batteries more efficient actually requires more metal, not less. We'll execute a deep dive on the Leapfrog Strategy, the specific manufacturing bet the West is making to bypass China's supply chain entirely. And finally, I'll show you exactly how the biggest players are positioning themselves for what I believe is the start of the lithium supercycle. To understand why this commodity is about to explode, you have to stop listening to economists and start listening to engineers. The central problem of robot economy is not intelligence. We solved that with GPT-5. The problem is gravity. If you want a humanoid robot like Tesla's Optimus V3 to actually replace human labor in factory, it needs to work a full 8-hour shift without stopping. Think about what that robot is doing. It is running a massive AI model in its chest to process vision. It is calculating balance in real time. And it is firing 40 high-torque motors to lift heavy boxes. With current battery technology, the liquid lithium-ion cells we have used since the 1990s, that robot performs fine in a YouTube demo. But under heavy industrial load, it dies before the lunch break. So, the obvious question is, just add more batteries, right? No, that is the trap. If you add more batteries, the robot gets heavier. Because it is heavier, the motors have to work harder just to lift the robot's own legs. Because the motors are working harder, they drain battery faster. This is the vicious cycle. In aerospace, we call it the tyranny of the rocket equation. We have hit a hard physical limit with our current technology. Inside your phone right now, the battery is filled with liquid electrolyte. The lithium ions swim through the liquid and hide inside a generic carbon sponge called graphite. There's a limit to how much energy you can store in that sponge before it becomes unstable. It's called the intercalation limit. Think of the graphite anode as a bookshelf. The lithium ions are the books. You can only cram so many books onto the shelf before the wood starts to crack. And in a battery, cracking means death. This is the part most investors miss. Every time you charge your phone, the graphite expands by about 10%. Every time you discharge, it shrinks. This constant breathing cracks a microscopic protective layer called SEI, solid electrolyte interface. When the SEI cracks, the liquid electrolyte rushes in, reacts with fresh lithiums, and creates that byproduct called dendrites. This is why your battery dies after 3 years. It is suffocating in its own waste products. We cannot optimize our way out of this. We need to change the chemistry entirely. We need a material that doubles the energy density without increasing the weight. If we don't find it, the robot revolution stays stuck in the server rack. It'll never be able to walk. This brings us to the single most important concept for this trade. If you understand this, you will understand why Elon Musk is obsessively buying mining rights in Nevada. The common belief is that as technology improves, it gets more efficient. Therefore, we should need less raw materials over time. That sounds logical, but in battery physics, the exact opposite is true. This is what I call the Lithium Paradox. To solve the gravity problem I just described, the entire industry is moving toward a solid-state battery. This technology gets rid of the flammable liquid inside the battery and replace it with a solid ceramic or glass stone. But not all solid state is created equal. There are 3 main contenders. First, polymers. These are easy to make, but weak. They need high heat to work with. Second, sulfides. These conduct ions incredibly fast, faster than liquid, but they are unstable. If they touch air, they release toxic hydrogen sulfide gas. And third, oxides. These are ceramics. They are tough, stable, and safe. This is where the West is placing its bets. Because the inside is solid, we can do something radical. We can delete the graphite anode entirely, and we can replace it with pure lithium metal. Look at the difference. The old tech is a big block of carbon with a tiny sprinkle of lithium inside. The new tech is a solid slab of the metal itself. Here's the math that matters. A solid-state battery, the technology that unlocks 1,000-mile EV and the all-day robot, is lithium dense. It requires 40 to 100% more lithium for every kilowatt hour of energy compared to the battery in your Tesla today. So, as we make batteries better and more efficient, we're actually doubling the demand for the raw material. We aren't just burning lithium as a fuel anymore. We're building the structural skeleton of the machine age out of it. This is the supercycle. Now, we have to look at the map, because this isn't just about money, it's about national security. Right now, China effectively owns the battery market. They refine roughly 70% of the world's lithium. They make the cheapest cathodes and the cheapest anodes. If you're buying a standard battery today, you're sending money to Beijing. But just this month, the trap snapped shut. On January 6, 2026, China officially banned the export of the dual-use items to Japan. Officially, Beijing says this is retaliation for comments made by Japanese Prime Minister Sanae Takaichi regarding Taiwan. They call it diplomatic dispute, but look closer at the banned list. It includes rare earth, permanent magnets, and advanced battery materials. This isn't a diplomatic spat. It's targeted blockade of the Western supply chain disguised as a political argument. China is proving they can turn off the tap whenever they want. So, the United States and Japan are not trying to negotiate. They are trying to leapfrog. China dominates wet manufacturing, mixing chemical slurries in giant vats. But solid-state batteries are made differently. They are not poured, they are printed. To make a solid-state cell, especially the oxide type favored by the West, you use vacuum deposition and sputtering. Sputtering is the exact same technology used to make microchips. You blast a target material with plasma in a vacuum chamber to deposit it atom by atom onto a film. It is precise, it is clean, and it requires machines that China struggles to build. This is why the West believes it can win. The US, Japan, and South Korea have a massive lead in a semiconductor manufacturing equipment. By turning battery into a chip, they shift the battlefield from chemistry to precision engineering. This explains the urgency. The US is trying to render China's dominance obsolete by shifting the global standard to a new technology that plays to Western strengths. This is why you see Exxon drilling in Arkansas. This is why you see Tesla building its own refineries on the Gulf Coast. They are securing the feedstock for a new American-led energy architecture. Let's wargame this out. If the West succeeds in the leapfrog, what happens to the supply chain? China knows this is coming. That is why they're weaponizing the Takaichi dispute right now. They want to starve the West while they race to catch up on solid state. But the West is building parallel system. Look at Arkansas. The Smackover formation isn't just a science project. ExxonMobil is targeting the first production by 2027. Look at Nevada. Tesla is verticalizing their stack. Look at Texas. Tesla just turned on their refinery in Corpus Christi this month. This is a Fortress North America strategy. The goal is to have lithium mined in Nevada, refined in Texas, and printed into solid-state batteries in Kentucky or Michigan. Zero reliance on the Straits of Malacca. Zero reliance on China's refining capacity. This decoupling is what creates the price squeeze. I have given you the bull case, but you need to know the risks, because solid state is not a done deal. The biggest problem is not the chemistry, it's grain boundaries. Solid electrolytes are made of crystals. Where those crystals meet, you have a grain boundary. These boundaries add resistance. They slow down the ions. But worse, they are the weak points where dendrites can still grow. Yes, even in solid stone, lithium can force its way through the cracks, like a tree root breaking a sidewalk. If the manufacturing is not perfect, if there is even a microscopic defect in the ceramic firing process, the battery will short circuit. Right now, the manufacturing yield for these batteries is low. If QuantumScape or Toyota cannot solve the yield rate, if they cannot print these perfectly at scale, then the cost will never come down. And if the cost doesn't come down, the robot economy is delayed by 5 years. This is the risk you're taking. You're betting on manufacturing execution. So, how do we trade this? Most retail investors are chasing the daily price of the metal. They're panicked about missing the bottom. But if you believe in thesis, if you believe the robot economy is real, then you need to look at this as a long-term allocation, not a flip. There are two distinct ways to play this. First, you have the mining giants. These are the players securing the ground itself. Tesla is the prime example here. They are not just waiting for suppliers. They are buying mining claims in Nevada and refining their own lithium-rich spodumene in Texas. Then you have the energy titans like ExxonMobil, who are using their drilling expertise to tap into massive brine reserves. Their job is simple: control the faucet. When the supply crunch hits in 2027, they will name their price. Second, you have tech pure plays: QuantumScape, Solid Power, Toyota. These are the companies trying to solve the grain boundary problem. This is the venture capital bet in the public markets. It is binary. If they fail, they go to zero. But if they succeed, if they crack the code on the ceramic separator, they become the NVIDIA of energy. They will own the standard for the next 50 years. The Industrial Revolution was built on coal. The 20th century was built on oil. Both were about burning matter to release energy. The 21st century is different. We are moving from extraction to storage. The chart you saw at the beginning, that isn't a missed opportunity. That is the starting gun. The lithium supercycle has just begun. So, here's the question for you. In 2030, when robot economy is running full speed, do you think the price of its blood will be lower or higher than it is today? I'll see you in the comments below. This was Sean from bySpark. If you enjoyed the video, press like, subscribe, and hype this matter. And if you want a written version of this video with full references, subscribe to our newsletter. Thank you for watching. Until next time.